So to kick off, I'd like to ask a few questions of Tom and John and hear some of their perspectives and our thoughts on succession. So Tom, as I just mentioned, this is our 35th annual meeting. So that makes our first annual meeting, it was in 1987. So what were you thinking back then? Why did you start an annual meeting for shareholders, and kind of just give us a little color on that time frame?
Well, Deb, that's a very interesting question, and I should really go back to why we started the mutual fund in the first place. We were managing separately managed accounts at the time, and we were doing that for individuals primarily. And we had a lot of individuals come up to us and ask us if we could manage money for their children or their grandchildren. And we did that, and we tried to do that on the separately managed account side. But we found out early on that managing very small amounts of money was very, very hard to do because we couldn't diversify it enough, and we could only buy small lots of stocks. This made it very difficult for us to accomplish what we were trying to do, which was increase those accounts so that they could use them for college education or for some need that they might have for their children or grandchildren. So we thought a pooled approach would be better, and that's why we started the funds. Now, we realized when we started the funds that it would be very difficult to communicate to all of our shareholders what we were trying to do, and that was very important to us, to let our shareholders know exactly how we were managing their money and what we thought about the future for the management of those funds. So we thought we would start an informational meeting. However, you remember we began in 1987. And for those of you who can remember back to 1987, it was a very momentous year. We started out very, very well, and the fund was up significantly through September. Unfortunately, in October, we had something called Black Monday, when the market was down about 20% in one day. And when I went into the annual shareholder meeting in later October, the fund was down about 17%. So it was very, very important for us to communicate back then to our shareholders what we were doing in order to ease their fears about the marketplace and for them to hold on for the long term. So that's why we have an annual shareholder informational meeting, and that's why we continue it.
Great, thanks, Tom. I'm glad it's not 1987 anymore. I like the market returns this year much better. So John, you even have a sign outside to prove this. You've been with the firm for 25 years now, which is a lot of time with Tom. So what are a few of the things that really, that you've taken away from Tom, like just one or two things that really sum it up, your time with Tom?
Sure. Well, there's two things I think of immediately when I think of Tom, and that's optimism and patience. And first, optimism. I mean, Tom, I've been here 25 years, and Tom's always been a believer in the American economy, in American business, and really in the stock market, and that the stock market was the best way to grow your wealth over time ahead of inflation. And he's been right. And when I think about in 25 years, what we've been through, I've been through personally the Asian financial crisis in the late 1990s, technology bubble and the crash, where the market went down 50% over 3 years. And then even during that period, the September 11th terrorist attacks, and then the global financial crisis, and the market went down 50% again over a period of about 18 months. And of course, now we're living through the pandemic, which has been going on for over a year and a half and still ongoing. And even through all those things and other events that have happened, companies have become more valuable. They've grown their sales and their profits, and hence their stock prices. So optimism has been the right mindset. Of course, the second thing with Tom is patience. He's very long-term, and that's also the right mindset. If you think about investing, it really can last a lifetime, which is decades and decades. So it makes sense to have a very long time frame, a very long mindset. And Wall Street and a lot of investing focus is on the very short term, whether it's 1 quarter return or 1 year's return. And so from Tom, I've definitely learned to be patient and to think in years.
Thanks, John. I love that he's a half full guy too. So we'll keep focused on the future. So Tom, the next question I wanted to ask you is in our September 30th mailings and information to all of our investors, you shared an important piece of your succession plan. And I know some people may not have had a chance to read it yet or may not have even received it yet. So could you fill in everybody in the audience on what your announcement is?
Well, the announcement, Deb, is that I'm retiring off of the funds as of December 31st of this year. That doesn't mean that I'm going away. I'm still going to be around. As a matter of fact, we've been thinking about succession for a long, long period of time. It really started in 1993 when our board urged me to think about its succession, especially for my role. As you know, John Fox, who is our Chief Investment Officer, was also promoted to Chief Executive Officer 2 years ago. John's been with the firm since 1996. And Deb Pollard, who 5 years ago was promoted to President and Chief Operating Officer, has actually been with the firm for 29 years, I believe. So those two promotions were ones that we thought of along the succession line. Furthermore, my daughter, Ann Putnam, who is Senior Vice President and in charge of all sales for the firm, has been with the firm 15 years now. So if you look at our analysts, as a matter of fact, there are 8 analysts excluding myself, and the average tenure of those analysts are 14 years. So we really have thought about succession in a big way. And I believe that that's going to be well and do well for our shareholders and all of our associates and the firm going forward.
Okay, thanks, Tom. And for all of you, you will be receiving a lot of more information on this topic, so stay tuned. So John, another question for you. I know that you and Tom have worked on the investment research team in particular and succession plans. Can you fill us in on some more of the details there?
Sure. Well, the number one thing that we can do, and that we have done, is to add talented people to the investment team. So let's start with that. And if you look at our team today, I like to say we have 5 generations of research analysts. And that starts with Tom. And this is public information. So Tom is 77 years old, and he's our first generation. And we have, as I said, 5 generations down to people that are been here a few years and they're in their 20s. So we have a good spread of ages and are set up for a very, very long time of people working here. The second thing is we have multiple people on managing each fund. So it's not a single person. We have a team of 2 on the small cap fund and on the dividend focused fund. And we recently announced that Mark Roberts has joined Drew and I October 1st on the value fund. So after Tom retires from the funds on December 31st, we will have a team of 2, 2, and 3 managing each fund. So we think, given the amount of years we've worked together and the new talent that we're adding to the firm, both through hires and through our summer intern program, we think we have a long runway ahead of us.
Okay, great. Well, you guys have certainly built an excellent investment team. So kudos to you. So Tom, I know we're talking about some of the future. We've talked about a little bit of the past. So let's just talk a little bit about the current. What are you up to these days? And what are some of the primary areas of focus as executive chairman?
Well, as I said before, I'm not going away. I enjoy this business too much. One of my main functions, I think, in the firm today is mentoring. It's very important for me to mentor from my experience going way back to 1974, before some of these associates were even born. It's a very rewarding thing to do. As some of you know, I was a college professor before I became an investment manager, and teaching is one of the things that I really enjoy. So mentoring follows right along in that role. And I'll be ensuring the adherence really in my mentoring process to the firm's mission and culture, which I feel is very, very important, and very, very important to continue that in a way that's meaningful for the future generations of this firm. I also will have oversight and execution of looking over the goals that the firm sets by the senior management team, by John Fox as CEO and you, Deb, as our president, and the entire senior management team. And I will be involved in the board, of course, as executive chairman, be involved in the board development and meetings and agendas and committees. But mentoring is the most important job that I think I have in this firm. And I really enjoy getting together with the young associates, and occasionally they do ask me some questions. So hopefully I have the right answers that will carry them forward in the future and provide safety and ensure the wealth of our shareholders in the future.
Well, that's great. I know our investors are happy to hear that you'll be around for a long time, and I think I can speak on behalf of all of the associates on that point too.